Alright, so this video is going to be a quick one, hopefully, about where to find trades. Alright, so where do you find trades? And this is a diagram that David had talked about in his public webinars. Basically, it's not rocket science. Everyone knows these strategies, but I'm going to cover them cover them. So we know that the shortening of the thrust is let's just start from the beginning. It establishes a range, and above here you have a shortening of the thrust. Now, does that mean you trade the shortening of the thrust? Not really, because the shortening of the thrust is indication that momentum is waning. It's telling you that there's an issue with momentum, there's an issue with breakout buyers buying the highs, and if they stop, it's going to go back to support at least. So does that mean you trade the shortening of the thrust? No, but in a range, the shortening of the thrust is an upthrust. And at that point, you really should take a look at it. Because shortening of the thrust in the context of a trend is shortening of the thrust, but in the context of a range, it's an upthrust. All right? So it depends if it's in a trend or if it's in a range. However, the general idea of shortening of a thrust, and I'm talking about general analysis, is that from high to high to high, the distance is decreasing. So that is an indication that momentum is waning. All right. So when he's talking about shortening of the thrust, but what I'm saying is that we're not trying to sell shortening of the thrust, and I believe he's also not trying to sell shortening of the thrust. All right. But when you see an upthrust, like let's say after a breakdown, you have a pullback and then another pullback that upthrusts the prior high, you know, that's something you want to take a look at for a sell. Here, the shortening of the thrust is just an indication that you have a high, and another high, and then from high to high to high, it's decreasing. Okay. I don't believe that shortening of the thrust should be sold. I think it's more of an indication of fatigue for the market, unless when it's in a trend. When it's in a trend, all right. In the context of a range, when you talk about shortening of the thrust, meaning if you draw a box over here in this circle, if you drew a box right at the top, you draw a box in the circle. That last pop up would be an upthrust. Okay, so that's when shortening of the thrust is an upthrust when you look at it from the perspective of a range. Anyway, the market goes down and now you have an upthrust, right? This is a proper upthrust against the prior high. This is a range and this is a place to take a look for shorts. All right, now even if you are in a range, like let's say you're in a weekly range, but on a 15-minute chart, it trends from support to resistance. So a weekly range can obviously contain trends on the lower time frame, even though it's a range. So having noticed that, when the market breaks down and pulls back to test, you have a sell opportunity. Why? Because it's a breakdown and a test of a breakdown, and a test of a breakout or a breakdown is an area to look for buys and sells. This is the break and test strategy. Also in Wyckoff, was it jump over the creek and come back to creek, and break the ice and come back to ice? Whatever. The point here is it's a break and test, breakout and test of a breakout in expectation of continuation. That's why he has these lines here, because they are trading opportunities, and he's encapsulated it within a down channel, indicating that it is a downtrend within an overall sideways higher time frame trend. So where do you look for trades? Well, on the dash lines. So the dash line here is showing the upthrust within a higher time frame range, sideways range, and the dash line is showing the test of a breakout within a lower time frame trend. So the dash lines is what you want to look at. Dash line, break, pullback, test. Again, break, test. Again, now the dash line is springing the higher time frame range. So it's an opportunity to look for a buy against the sideways range. Scenario B is that it breaks down, and you guessed it, it pulled back once, goes lower, pull back twice, higher low, pull back three times, and tags the line. Notice he did not just sell the reversal of the break of the pullback. Everyone knows that when the market pulled back, the first pullback is more of like um, is more of like an indication of strength and weakness, and it's also used. Some systems believe it's something called inducement that has to do with what is it? Catch early shorts and catch early longs. But it's more than that. By the pullback here, when it pulls back, you can measure the amount of retracement. If it's a very shallow retracement, especially under 50%, it means demand is weak. And that's a very good indication to wait for it to come back up here and test for sells, right? Because the halfway back mark is a key uh, uh, concept in Wyckoff. It's not just a retracement, it is a measure of demand strength and supply strength. So when the market pulls back here, if it's less than 50%, let's say 33%, that's indication that demand is not good. It's weak. And that doesn't mean sell it. It means wait for it to come back and test and give you that low risk opportunity to jump on board. All right, where was I? All right, so over here, up here, the market rallies, break, and pull back, and the dash line is there. So what does the dash line mean? It means look for trade. What trade? Breakout, test, breakout, test. Then again, breakout and test and rally. So really, this is all about breakouts and tests and trading ranges, meaning what you're doing is you're trading the edges, trading what we call edge, yeah, trading the edges of a range. That range can be in a trend because when you have a breakout, it's establishing a new range. So what you're doing is the edge of the range is right here at the breakdown of the dash line here, right? If you see dash line, what's it doing? Creating a range. Then it breaks out. What's it doing? Creating a range. Then here, breakout, range, next breakout, range. It's always a range. His perspective is horizontal, meaning breakouts and tests, always creating ranges. Even when they're in a trend, you're framing it with ranges. Those ranges are using pivot high and pivot lows. All right, pivot high, break, creates a range. Support become resistance, resistance becomes support. It's a very old concept, but I mean, even today it works. I'll show you plenty of examples. Matter of fact, let me do that. Here's what do I do? Maybe look at the YM today. All right, the RTY is the very easy. Right? Here you had a break, follow through. What happened? Tested the low of the breakdown. Here you had a break, follow through. What happened? Went into the breakdown test. Here you had a break, pull back where to in the breakdown bar. Here you had a break, follow through. Where did it test? In the breakdown. Goes over and over again. Here you had an up thrust. After that, you had a slight break. It did not have follow through. So this was a little concerning because it didn't have follow through. I could put it in a spring position. So what happened? it basically tested resistance and then it broke. This I'm not too sure about because I don't really see clear breakdowns. Even, even in the past, you can see it. This is a break, it's a gap, and it got tested. Here, another gap, break, and what happens? The gap get tested because a gap is really the same thing as a big bar. All right, that's it. Break, test. Again, break, what do you get? Test of the breakdown. I mean, over and over again. Break, follow through, then test. Break, follow through, then test. Break, no follow through, back off. Break, no follow through, back off. What happens? It reverses. So the follow through is critical. Like here, break, follow through. So just wait for the test. If you get it, you get it. You don't, wait for the next break. All right, let's just take another market. Let me go to YM. And I don't want to just use today as an example. Like I'm trying to give realistic examples. Here you have an uptrend, for example. You have a downtrend, then you have an uptrend. What do you have? You have a break. I don't like the follow through here. But anyway, it tested. Here again, you have a break. This is the breakout bar right here. You can see by the expansion of range and that green signal I have there. So it tests. What happened? Went sideways, breakout, breakout. What happened? Test the higher breakout. So again, you had breakout here, right here, with that green was a BO. Test. Again, breakout, goes higher, comes back to do what? Test. And the story goes on and on. And then over here, you had a breakdown, follow through. It tested, but it could not break down further. So it's more like a small move where you had a breakdown, it got tested here and just went down a little bit. Then here it gets a little tricky. I can't really read this, but I know this breakdown has no follow through, which tells you that probably two things can happen. One, it's going to test resistance, or two, it's going to reverse because potential spring, because the breakdown didn't have follow through because it's being bought. All right. So again, ding, 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 break. What happens? Test. Break. What happens? Test. Another move. See, on, see, again and again. Break. Pull back where? Test. Then what happens? Move. Break. What happens? Follow through. Then break down here. Not enough follow through, so it does an up thrust. Then it has a break. And then it has a test. Then a break and a test. And a break. Now it gets fishy because you have a breakout to the upside, but it's potentially in an up thrust position. So I just wait, back off until they establish trend, because you know that it could just be reacting at a support level, or this could be a purposeful move to to um, to run the stops. Yeah. Here you have a break, and then what do you have? Test. Boom. Break. Test. Small move. What happens? When you have a break and very little or no follow through, like you have breakdown immediately followed by a green bar, it's a problem, right? So that two situations, either it's gonna take out the high or it's gonna test the high, or it's just gonna go the other way. In this case, it up thrusts and then does the final break, but no follow through, goes the other way. Here, same shit, but you have a breakout to the up. You had the market in spring positions, right, against this low. They were giving small moves and a breakout. But what happens? Does it have follow through? No, it breaks down. So this is a break. What happens? Gets tested, pukes. Again, against this low break, what happens? Tested, pullback. Tested, pullback. Break, test, pullback. So this is a very nice way of and very easy way of reading the market. Very, very easy way of reading the market. Like I know a lot of folks, and including myself, sometimes get sick and tired of doing too much analysis. So one easy thing to do is in a trend, just look for the breaks, breaks, and observe the test of that break. And if you know how to do that, you know how to get in on any trend, any trend. So that's very, um, very helpful because when you think about it, right? What is the market doing, going from point A to point B? It's just having a series of breakout and pullbacks. And yes, you'll have shakeouts and all that, thrust, whatever. But literally, what is this higher high and higher low? Like, what is it? What it is this establish a resistance, and then you have a break, and then you have a resistance, and then you have a break. So as you can see in this downtrend here, the downtrend is just a series of breakdowns. Break, 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 break. Come back up a little bit, wide, retracements, stop grabs, who knows. Then break, break, break. Like same. It's a series of breaks. It's a series of breaks. Trend is, yes, it's higher high, higher low, or lower high, lower low. It's also where the downswings are bigger than the upswings, and vice versa for an uptrend. It's also a series of breakdowns. If you look at it from a behavioral perspective, what behavior out of the different behaviors like climaxes, shortening of the thrust, effort reward, which behavior would best describe trend if you had to describe trend through the lens of behaviors? It would be a series of breakouts and breakdowns. Can anyone argue that? That a downtrend is a series of breakdowns from one point to a lower point, or an uptrend is a series of breakouts from a low point to a high point. So, from the perspective of behavior, you cannot describe it with a shortening of the thrust. You cannot describe it from a perspective of climax. You have to describe it from what? Breakouts and breakdowns if you're going to describe trend. Anyway, long story short, and I mean by behavior, I don't mean just higher high, higher low. I mean behavior. It would be, you cannot describe it from absorption, right? So how would you describe trend? Series of breakouts or series of breakdowns going from one point to a higher objective, or one a higher objective to a lower objective. As you see here in this trend, you have break, 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 and then on the uptrend you have break, break, break. So where do you take the positions? You take them on a break and test, break and test, and break and test. This is why this strategy is so powerful. And most of them, I mean, you'll have the occasional whipsaw and this and that, and in certain markets that are non-trending, right, it's not a good idea. But in markets that are trending, the break and test is uh, is something you definitely want to incorporate, right? See over here, there's no break and test, meaning in a higher time frame perspective with these two dash lines at the top and the bottom. So that in that context, you use ranges of support and resistance to look for trades, the edges of the range to look for trades. But in the context of trend, you have breaks and test of breaks, breaks and test of breaks, breaks and test of breaks. That is what you're looking at. All right, that's enough for today. Thank you all. Bye.